Good morning again, learners. This is Miss Toby, your accounting teacher. So we are still continuing on financial statements and we are doing depreciation. So now we are doing the second method, which is the diminishing balance method. So same exercise. 1 March 2019, bought equipment for 65,000. Depreciation must be provided for at the rate of 15% per annum. Let's go now here. This was the cost price method. Let's go to the diminishing balance method. So this one, I need you to concentrate a little bit. So this one, the cost price doesn't change in the rate because we are using the same rate. So, however, the method for this one, okay, so I'm copying. So the method for this one, for the second one. So this one was cost price times rate times the months. So this one now is cost price minus, that's the difference, accumulated depreciation. Remember that. Then the rest is the same, times rate times months, which is number of months. This is what you do with the second method. This is now the diminishing balance method. So in the first one, it's simple. The first one, there is no accumulated because we just started. So it will be 65,000. Let me do it like this. So it will be 65,000 minus 0 because there is no accumulated yet, times 15 over 100 times 12 over 12, which gives us the same amount, 9,750. So the depreciation for year one is the same. Let me do this. Let me make it clear. So year one is like this. That's the depreciation for year one. So we go back 9,750. So 9,750. Then accumulated, there's nothing else that happens. So accumulated is also the same, 9,750, because there's nothing else in the previous years. And then the this one, the book value, we say how much is it worth now, the value of the car now, or the carrying value. So it's cost price minus accumulated depreciation. That's how you get the carrying value. And then now we've got now accumulated depreciation. Remember that method is cost price minus accumulated. So for year two is going to be different. Okay, I was supposed to put it in the next sheet. So year two will be 65,000 minus the accumulated depreciation, which is 9,750 times 15 over 100 times 12 over 12. That will give us, I think I have the answer here, 8288. This is what I'm getting. So depreciation for this year two, is going to be 8288. What is the accumulated depreciation? Because previous year's accumulated depreciation plus current year's depreciation. Then that will be the accumulated depreciation. And then which means the carrying value is cost price minus accumulated depreciation, which is this. Now, this accumulated depreciation, which is 18,038, that's what we're going to use. Cost price minus accumulated. So we go back here. So for year three, it's going to be 65,000 minus 18,038. And then we say the rest doesn't change. 15 over 100 times 12 over 12, which gives us how much does it give us? 7,044. Can you see that the depreciation keeps going down? That's why they say diminishing balance, because the first one was 15% of 65. This one is 15% of 65 minus this. So it will keep going down. That's why it says diminishing balance. So that's how you can figure out if you could forget which is which. So depreciation here is 7,044. Then accumulated depreciation, like I said, equals previous year's accumulated depreciation plus current year's depreciation. Carrying value will be cost price minus accumulated depreciation. There you go. And then for year 4, I'm sure you can do this on your own now, but let's just finish it up. Year 4 would be now 65,000 minus the accumulated depreciation, which is 25,082. 25, oh, what did I do? 25,082. 25,082, which give, okay, times, you'll see it when I finish typing, times 15 over 100 times 12 over 12. And that gives us how much? 5988. That gives us 5988. So we go back here and then we get 5988. 5988. And then what did I say? This is equals previous year's accumulated depreciation plus current year's accumulated depreciation. And then the value of the vehicle is going to be cost price minus accumulated depreciation. So even if you compare the depreciation, the first year is the same, but the second year, this is 45,000. This car, if you use the cost price, is worth 45,500 in the second year, but here it's worth 46,900. So the value when you're using the diminishing balance method is high. So you must choose which of your assets you want is lasts longer, and then you use the diminishing balance method. So yeah, so it's up to the accountant, really, it's up to you, but then you must be consistent. You can't change and say, this year I'm going to use diminishing, the next year I'm going to use. So you can finish up the last one to see that you understood. And then this will be the end of this lesson, where you understand the difference between the cost price method, which is also called fixed installment method, and the diminishing balance method. And the two accounts you learned is depreciation, which is an expense, and accumulated depreciation, which is what? A negative asset. Okay, guys, thank you for watching. See you again in the next video. Bye.